Welcome back to the channel. If you're watching the US stock market for major institutional moves, artificial intelligence, semiconductors, quantum computing, or the next generation of high-growth technology companies, today's update is worth your attention. A major institutional investor has just revealed its latest US stock holdings, and the changes made during the second quarter are particularly interesting. South Korea's National Pension Service, one of the world's largest pension funds, made several notable adjustments to its U.S. equity portfolio. The latest filing shows a combination of profit-taking in some major positions, increased exposure to established technology companies, a renewed investment in Micron technology, and new positions in companies connected to emerging technologies. Among the most eye-catching names are SpaceX and IonQ. So why are these moves attracting attention? What changed inside the pension fund's portfolio? And what could these transactions tell us about the technology sectors that major institutional investors are watching? Let's break it down. According to the latest quarterly 13F filing with the U.S. Securities and Exchange Commission, the National Pension Service reported 552 U.S. stock positions at the end of June. That was slightly lower than the 562 positions reported at the end of March. So the institution actually reduced the number of individual U.S. stocks it held. However, the overall value of the portfolio moved sharply higher. At the end of the first quarter, the reported U.S. equity portfolio was worth approximately $131.7 billion. By the end of the second quarter, that figure had climbed to about $155.1 billion. That's an increase of roughly 18% in U.S. dollar terms. When the change is measured in Korean won while accounting for currency movements, the increase was approximately 19%, or around 39 trillion won. A major reason for that increase was the recovery in U.S. equities during the second quarter. After a difficult first quarter, the broader American stock market rebounded strongly. The S&P 500 gained approximately 15% during the second quarter, lifting the value of many institutional portfolios. But market appreciation wasn't the only factor. The National Pension Service was actively changing its exposure to individual companies. And that's where the filing becomes much more interesting. Let's begin with NVIDIA. NVIDIA remains one of the most important holdings in the pension fund's U.S. portfolio. However, the institution reduced its position during the second quarter. The filing indicates that the fund held approximately 440,000 fewer NVIDIA shares compared with the previous quarter. At the end of June, that reduction represented roughly $87.9 million in stock value. But investors should put that number into perspective. The reduction represented only around 1% of the fund's NVIDIA position. That means the National Pension Service did not make a dramatic exit from NVIDIA. Instead, the move looks more like a relatively modest portfolio adjustment after a tremendous period of growth for the semiconductor giant. This distinction matters. When a large institutional investor trims a position, it doesn't automatically mean the institution has become bearish on the company. Large funds frequently rebalance positions, lock in some gains, or move a portion of their capital into other opportunities. And while NVIDIA was reduced, several other technology giants saw their holdings increase. Apple was increased by approximately 500,000 shares. Microsoft saw an increase of roughly 320,000 shares. Amazon increased by approximately 530,000 shares. Meta Platforms was increased by around 160,000 shares. Tesla increased by approximately 130,000 shares. Alphabet also experienced buying and selling activity. The pension fund purchased shares of Alphabet's Class A stock while selling some Class C shares. When the transactions were combined, the institution ended up with a net increase in its Alphabet exposure. These moves show that the National Pension Service continues to maintain substantial exposure to some of the biggest technology companies in the world. But the most dramatic story among the established technology names may be Micron technology. Micron is particularly interesting because the pension fund had sold shares of the company during the first quarter. In the second quarter, however, the institution changed direction. It became a net buyer. The National Pension Service purchased approximately 10,000 additional Micron shares. The number of shares itself wasn't enormous compared with the scale of the overall portfolio. But Micron's stock performance during the quarter made the position much more significant. Micron shares surged approximately 242% during the period. As a result, the value of the National Pension Service's Micron position more than tripled, reaching approximately $3.3 billion. That pushed Micron's weighting in the reported portfolio to around 2.2%. Interestingly, that weighting was higher than the fund's exposure to Meta, which was around 1.8%, and Tesla, which represented approximately 1.7%. This is an important development because Micron is becoming increasingly connected to the artificial intelligence infrastructure story. The company is one of the world's major memory chip manufacturers, and memory is a critical component of modern computing systems. AI servers require enormous amounts of high-performance memory. As companies build larger data centers and deploy increasingly powerful AI models, demand for advanced memory technology has become an important part of the semiconductor investment theme. That doesn't mean Micron is without risks. The memory chip industry can be highly cyclical, and semiconductor demand can change quickly. But the growing role of AI infrastructure has given investors another reason to watch Micron closely. And the National Pension Service's decision to return to the stock adds another interesting institutional signal. Now let's move to perhaps the biggest new addition in the portfolio: SpaceX. According to the filing, the National Pension Service added approximately 3.5 million shares of SpaceX, representing a position valued at roughly $598 million. That is a substantial commitment. SpaceX is not simply another conventional technology company. Its business exposure includes commercial space launches, satellite communications, and the rapidly expanding Starlink ecosystem. For long-term investors, these businesses represent potentially enormous markets. Global demand for satellite connectivity continues to develop, while commercial space activity is becoming increasingly important. The National Pension Service had already participated in SpaceX's public offering process as an institutional investor before the company became publicly listed. That previous involvement makes the new position particularly notable. It suggests the institution had already been interested in gaining exposure to SpaceX and was prepared to increase that exposure when the opportunity became available through the public market. But SpaceX wasn't the only emerging technology company that attracted the pension fund's attention. Another name that immediately stands out is IonQ. The National Pension Service purchased approximately 70,000 shares of IonQ. The position was valued at around $3.9 million. Compared with the fund's investments in companies like SpaceX, Apple, Microsoft, or NVIDIA, the IonQ position is relatively small. However, the significance of the trade goes beyond the dollar amount. IonQ operates in the quantum computing industry, one of the most closely watched emerging technology sectors. Quantum computing is still in an early stage, but researchers and technology companies are working toward systems that could eventually solve certain complex problems more efficiently than traditional computers. Potential applications could extend across areas such as scientific research, optimization, cryptography, financial modeling, material science, and drug discovery. However, the industry remains highly speculative. Quantum computers face major engineering challenges, and widespread commercial adoption is still uncertain. That's why a relatively small institutional position can be interesting. A fund doesn't necessarily need to commit billions of dollars to an emerging technology to gain exposure to its potential. By establishing a smaller position, an institution can participate in the long-term opportunity while limiting the amount of capital exposed to the uncertainty of an early-stage industry. The IonQ purchase is also notable because it represents a direct investment in a pure-play quantum computing company. That makes the position particularly relevant for investors tracking the growth of the quantum computing sector. The pension fund didn't stop with IonQ. It also added new positions in Cerebras and IREN. These additions suggest that the institution was looking beyond the traditional group of mega-cap technology companies. Instead, it was exploring businesses connected to emerging technology and future growth themes. That is an important part of the bigger picture. The National Pension Service wasn't simply buying more of the same stocks. It was expanding its exposure across different areas of the technology ecosystem. On one side, the fund continued to hold major companies such as Apple, Microsoft, Amazon, Alphabet, Meta, Tesla, and NVIDIA. These companies already have enormous businesses and established market positions. On the other side, it added exposure to newer and potentially more speculative areas through companies such as SpaceX and IonQ. Micron provides another angle, combining an established semiconductor business with growing exposure to AI-driven computing demand. At the same time, the institution also removed several companies from its portfolio. Pinterest was completely sold. O'Clock was also removed. DraftKings was another position that was exited. These exits show that the fund wasn't simply increasing its overall exposure to every growth company it could find. Capital was being moved from some positions into others. And that's an important distinction for investors. A 13F filing can tell us what an institution owned at the end of a quarter, but it doesn't explain every reason behind a transaction. A company can be sold because an investor believes its valuation has become too high. It can be sold because the investor wants to take profits. It can be removed because the institution's portfolio strategy has changed. Or it could simply be part of routine risk management. The same principle applies to purchases. A new position doesn't necessarily mean the institution expects the stock to immediately rise. For long-term funds, the investment horizon can be much longer than that of an individual trader. So the best way to interpret this filing is not to blindly copy individual trades. Instead, look at the larger strategy. And the larger strategy appears to be focused on maintaining exposure to major technology leaders while also identifying emerging growth opportunities. Artificial intelligence is clearly one of the major themes running through the portfolio. NVIDIA remains a major position. Micron has become significantly more valuable within the portfolio. Microsoft and Amazon continue to provide exposure to cloud computing and enterprise technology. And Meta and Alphabet remain major players in AI and digital platforms. But the strategy appears to extend beyond AI. Quantum computing is represented by IonQ. Advanced computing is represented by companies such as Cerebras. Space technology and satellite communications are represented by SpaceX. This creates a diversified exposure to several potential technology trends that could shape the next decade. Of course, investors should keep the risks in mind. Emerging technology companies can experience extreme volatility. Quantum computing is still developing. Space businesses require significant capital and face substantial technical challenges. Semiconductor companies can be affected by supply cycles, pricing pressure, and changes in demand. Even the largest technology companies can experience significant declines when valuations become stretched or market conditions change. That's why institutional ownership should never be treated as a guarantee of future performance. Instead, these filings are useful because they provide a snapshot of where sophisticated investors are allocating capital. And this particular snapshot is fascinating. The National Pension Service's U.S. portfolio grew from approximately $131.7 billion to $155.1 billion during the second quarter. The number of reported positions fell from 562 to 552. NVIDIA was trimmed modestly. Apple, Microsoft, Amazon, Meta, Tesla, and Alphabet saw increased exposure. Micron was bought again after being sold in the previous quarter. SpaceX became a major new position, worth approximately $598 million. IonQ was added with an initial position of around 70,000 shares. Cerebras and Iron were also introduced. Meanwhile, Pinterest, O'Clock, and DraftKings were removed. When you put all of these moves together, a clear theme begins to emerge. The institution appears to be balancing today's technology leaders with potential winners of tomorrow. That's especially interesting because major pension funds typically have very long investment horizons. They don't necessarily need every investment to perform immediately. Instead, they can position capital for technological trends that may take years to mature. That makes the SpaceX and IonQ positions particularly worth watching. Both companies operate in industries that could look very different 5 or 10 years from now. The question is whether those industries can deliver the scale and profitability that investors currently expect. For IonQ, the key issue is whether quantum computing can progress from research and early commercial applications toward broader adoption. For SpaceX, investors will be watching the growth of its various businesses, including satellite connectivity and commercial space operations. For Micron, the major question is whether AI-driven memory demand can support strong growth while the semiconductor cycle remains favorable. And for the major technology giants, investors will continue watching whether enormous AI investments can translate into sustainable revenue and earnings growth. Those questions cannot be answered by one quarterly filing, but institutional activity can provide useful clues. The latest National Pension Service portfolio shows that large investors are still looking toward technology as a major source of long-term growth. At the same time, they're not limiting themselves to the companies that dominate today's market. They're also exploring technologies that could potentially define the next generation of computing, communications, and infrastructure. That is the bigger takeaway from this filing. Rather than simply following a single stock, investors may want to watch the themes behind these investments. AI infrastructure, advanced semiconductors, quantum computing, high-performance computing, satellite communications, commercial space technology. These are areas where significant technological development is already taking place. Whether every company succeeds is another question. Some will become industry leaders. Others may struggle to turn technological potential into profitable businesses. That's why careful research remains essential. Before investing in any stock, consider its valuation, financial condition, revenue growth, profitability, competitive position, management, industry risks, and long-term business model. And remember that institutional investors have resources, time horizons, and risk management strategies that may be very different from those of individual investors. So don't treat a 13F filing as a buy signal by itself. Use it as one piece of the puzzle. The National Pension Service has given investors a fascinating look into how it positioned its U.S. portfolio during a powerful market rebound. And the combination of mega-cap technology stocks with emerging names like SpaceX and IonQ makes this filing particularly interesting for anyone following the future of technology. We'll continue watching these developments and tracking how institutional investors position themselves across AI, semiconductors, quantum computing, and other high-growth sectors. If you found this analysis useful, make sure to follow the channel for more updates on major institutional stock moves and important developments across the U.S. market. And as always, remember that this content is for educational and informational purposes only. It is not financial advice. Always do your own research, understand the risks, and make investment decisions based on your own financial situation and investment goals. Thanks for watching, and I'll see you in the next video.